Fed cut rates and mortgage rates go up. Sounds completely backwards, right? Well, yes, it would be if that's how things actually worked. But it's not. And today I'll explain why, along with what's really driving mortgage rates, what's happening with home sales, and why October could be the very best time to buy a home in 2025. Welcome back to my mortgage and housing update. My name is Pauline Lee. I'm a licensed real estate agent and mortgage loan officer, and I help buyers make smart, confident decisions. If you find this update helpful, make sure you hit like and subscribe so you don't miss next month's breakdown. Let's start with the Fed. On September 17th, the Fed cut short-term rates by 25 basis points, bringing the target rate down from 4 to 4.25. And yet, average 30-year mortgage rates actually rose after the announcement, moving from 6.13% to 6.37%. Here's what really happened. Markets anticipate change. Mortgage rates follow the stock and bond markets, not the Fed directly. Leading up to the Fed meeting, rates had already dropped significantly from 6.53% to 6.13% because of weaker jobs data and downward revisions to employment. Investors expected the Fed to cut, so when they finally did, that news was already baked in. Since then, mortgage rates gave back some of their earlier gains because several Fed speakers have suggested that additional rate cuts are not guaranteed this year. The message was clear. There is no risk-free path ahead. Translation: tariffs could fuel inflation, weak jobs growth could hit employment, and the Fed is carefully watching both sides of the risk. Quick check-in for you. Are you more worried about inflation pushing rates higher or jobs slowing down the economy? Comment below. I'd love to hear what you're seeing in your own industry. So where do we go from here? Markets are currently expecting an 86% chance of another 25 basis points cut at the October 29th meeting, a 65% chance of yet another cut on December 10th. In other words, the market is leaning towards more cuts, but it's far from certain. That's why mortgage rates remain volatile. They move on expectations, not headlines. If you want to know what today's rates mean for your buying power, reach out. I'd be happy to run personalized numbers for you. My consultation link is in the description below. Now let's talk housing data. In August, new home sales spiked to an annualized pace of 800,000 units. That's the highest level since January 2022 and a massive 20% increase from July. Most of those gains came from the South, which accounted for about 2/3 of all new home sales. And despite the big jump in sales, the median sales price still rose 5% month over month to $413,500. So what's behind this surge? It wasn't mortgage rates. Those didn't fall meaningfully until September. Instead, builders got aggressive with sales incentives and price adjustments, clearing out inventory they had completed over the summer. Meanwhile, existing home sales slipped slightly, down 0.2% in August to an annualized pace of 4 million units. The median sales price eased by 0.7% to $423,000. This slower pace shouldn't surprise anyone. Existing homeowners are still locked into historically low mortgage rates, so fewer are listing their homes. But with rates easing in September, I expect we'll see a bump in existing home sales when those numbers come out. If you're shopping, this could be an opportunity. More inventory is slowly returning, and you may have more choices without as much competition. I invite you to get on a call with me to discuss if this is the best time for you to buy. So when's the best time to buy? Well, the real answer, 5 years ago. But joking aside, according to Realtor.com, the week of October 12th through the 18th has historically been the seasonal sweet spot for buyers. Why? Because inventory is still high coming out of the summer, but buyer demand cools off as families settle into school routines and the holidays approach. That means more homes to choose from and less competition, a double win for buyers. If you're thinking about making a move this fall, now's the time to line up your financing so you're ready to act when the right home hits the market. The first step is pre-approval, and I'd love to help you with that. Click the link in the description to schedule your free consultation with me today. What this means for you. Here's the bottom line. Mortgage rates are still higher than the pandemic lows, but they're easing compared to where we started the year. Builders are making deals, inventory is ticking up, and mid-October historically brings buyers an edge. That combination creates opportunity if you're prepared. Don't wait until the perfect home slips away, because once it's gone, it's gone. Take the first step today by getting pre-approved. It costs you nothing to have that conversation, but it could give you thousands when it's time to negotiate. My goal with these updates isn't just to share numbers, it's to help you feel prepared and confident when it comes to buying a home. I want the process to be smooth, not stressful. That's why I put such an emphasis on education and planning ahead. The best way to get started is with a mortgage pre-approval. It gives you a clear picture of what you can afford. It makes your offer stronger when you find the right home, and it helps us identify any obstacles early, so there are no surprises later. If you're planning to buy in the next 6 to 12 months, let's get you prepared now. Click the link in the description to schedule your free pre-approval consultation with me. We'll walk through your options together and make sure you're ready to move with confidence. Thanks again for tuning in. I'm Pauline Lee, a licensed real estate agent and mortgage loan officer. Connect with me for a consultation. I encourage you to get pre-approved.